In this video, traders, I want to talk about the impulse bar significance. Stay tuned. Hey guys, warm welcome to you. All right, so what's the significance of an impulse bar? So if you're trading, let's say a 5-minute chart, 3-minute, maybe 10 minutes, something like that, then very often we get these kind of big stretch bars. Like, okay, what does it mean? How do I respond to it? You know, how can I get can I kind of work a strategy off it? So this is my interpretation of some of these impulse bars. Now, sometimes you see this and there's not that much meaning to it, and I don't think there's an opportunity there. Whereas other times, maybe it gives you a bit of a glimpse into supply-demand imbalance, and just by the nature of the move of the bar and the position of the price, you go, actually, that could be something worth looking at. So imagine we've got these different scenarios. We've got this scenario here where the market's been kind of ranging. The impulse bar comes in, and by the way, impulse bar is just like a bigger range than normal, I'd say. Impulse bar comes in, and if you're looking at volume, you probably get a higher volume as well, just because that's generally has a linear relationship with the range. You've got big range, normally have big volume. So you get this big kind of drive higher. That's a little bit more interesting, right? Because we've had this range here, and I'd say, hey, it's broken out that range. Is that a good breakout situation? So I'm going to give that a little kind of tick and say that's minorly interesting, slightly interesting, let's say. Minorly, good word. What about this scenario? We're sitting in a range, and imagine that's kind of zoomed in a little bit. We're sitting in this range back and forth, and then we get this impulse bar, which is a bigger bar than the rest of them. But how significant is that? Well, for me, it's not that much significant, because literally a few bars ago we were down here. No one's really caught out. No one's really kind of been stopped. Nothing really big has happened. So I don't think there's that much significance to that. Now, okay, this is all arguable, and this is my perspective, but I think that when you're in a range and there's nothing fresh happened, nothing new's happened, then there's less people going to get involved in it. They're going to be like, okay, we've probably got alerts here, algos maybe working around a VWAP, maybe the VWAP sitting kind of in this sort of scenario here. It's not that exciting, whereas this scenario is more likely to be, we've either pushed back to a VWAP if a VWAP was there, or if it's down here and we've kind of been pushing up, it's away from it. So you'd think that there's probably going to be some sort of excitement to it. Okay. Now we've got a couple more. So we've got this one here, which is I wanted to kind of depict a persistency of trend type scenario, so a drive higher and then impulse bar lower. Now, I'd say this is significant, but with a little caveat. We'll get to the caveat in a moment. So I'm going to put a little tick here and come back to that. Now, what about this scenario here? We're in a range, and this has broken out of the bottom of the range and then gone higher. Now, to me, that's got a double significance, right? It's even better than that, because we've tested through this low, and you can just about see that. I don't know if you can. We've tested through the low, and we've pushed back up. That's a classic kind of Wyckoff spring pattern, that type of trade. Gone through a level, looked around, no one about, no one's really selling this. Buyers are stepping in, and sellers have kind of really been flushed out, and it just leaves that liquidity vacuum, and often you get a spike higher. Okay, so we've got rid of this. If we're getting, basically saying, if we've got an impulse bar in a range, I'm not that interested in it. Okay, what about an impulse bar out of a range? I like that, and I like that. So what I like to see is the response to that impulse bar. If you're holding up at highs and kind of put a few bars in here, then you're starting to develop the classic bull flag pattern that we all know and love, right? We get a drive, we get the high. So it's the start of a bull flag, and the earlier you can get on that flag, or you can not necessarily get on the flag, but you can structure a trade around it and say, hey, I'm not going to be reactive. I'm going to prepare for this. This looks like it could be the pole of the bull flag. How do I want to position? How do I want to play this? You start to think through your mind. If you get a little wick lower, pull back, we start to get some support. If you kind of get a downtrending flag here, I'll draw a trend line and take a break of that. You start to plan it a little bit more. Where's my stop going to be? Where's this? Where's that? So it's a response to that. Now, of course, if it goes up and just comes straight back down again, then you go, all right, I'm not going to use that as a momentum trade, but maybe that opens up a kind of a fake out through these lows. If it's done that, a big bar up, came back down very, very quickly, sellers have been very aggressive, I'm definitely going to be watching this level for a break, and it might even consider taking a break out of that level. So it's a response that's key. A couple of bars after, whatever time frame, 5, 10 minutes after, what's it done? What's it done? If it's consolidated near highs at the high type flag, then the presumption is that the strength may continue. Okay, so what about this scenario here? And that's the same for that, by the way. Those are very, very similar. I'd say that's slightly more powerful just because of that prior fake out. Okay, so what about this scenario here? This is an interesting one because we get this very often, right? We get this trend, and it looks like it's a fake out. Everyone's like, oh, yeah, look, it broke through the high on that bar, and then it's just completely gone round through, and we've kind of got this bearish engulfing bar type. Whoa, 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 hold your horses. We want to see the response to this. If it's just one bar, very often it's shaking out weak hands. It's depending on the strength of this trend, of course, but if the underlying trend is relatively strong, then that one bar isn't likely to undo things. And very often we get that. A lot of people get shaken out by that. A lot of people jump on short who are like, oh, I've missed the uptrend, I want to get on the short. And very often it's just market sell order or someone just sweeping the book or just some algo shenanigans, and often we kind of creep back up, and it's a resumption of the trend, and it kind of slowly kills anyone who's got short, who's holding on, and then we often get kind of a bit of a flurry as it pushes back through highs. Again, it's the response. If the response of that is then a continued selling or a consolidation here, I'd be a little bit careful that consolidation doesn't end up creeping up. If you've got an impulse bar that's counter trend to the movement, personally, I would want to see consolidation, but then a very quick continuation. Consolidation to me, if there's no volume or no more impulse after that, after say a couple of bars, then I'm just going to categorize that in the one-off bar thing and expect the resumption of the trend to continue. Expect people to say, hey, that was value up here, we've got a bit of a discount, let it creep back up. So any kind of consolidation long period of time, to me, has a tendency to creep back up. Time of day obviously plays a part, so you've got to put that into consideration, but that would be my perspective on it. But if it's pausing, and then you get another one, it might be the sell program kicked in, and you can kind of take advantage of that. Now, your choice is either going to be, do I want to trade that reversal down here, feels a bit late, or do I want to see where it kind of runs out of puff and maybe we kind of start to push up and some buyers start to see some strength based on the uptrend. That's for you to categorize and for you to kind of decipher yourself. So impulse bar significance, guys, I think they have significance, except for these type of things that are just sitting in the range. It's the response that's the key, but often they can be like, oh, hello, and they're very easy to set alerts for, right? You can set an ATR and trading view, whatever it is, at 1, which is giving you the range of the bar, or I'll customize a little tool that gives you the range of the bar, and then set an alert. And say, okay, if it goes above the average, or if it's the highest of the day, and you can kind of sometimes set a line on that and put an alert on that, then if there's a market you're perhaps not actively watching, you've got maybe a couple on other monitors, it's like ping goes off, or gold's just done this, and you have a couple of responses, canned responses for that. You say, right, I watch for 2 bars after that. If it does this, I position like this. If it does this, I position like this. And then you kind of construct your trade where you're not necessarily reactive, but you're responsive to some significance or potential significance shift in supply and demand. All right, guys, hope that's helped. See you in the next one. Take care. Keep the risk managed. Bye-bye.